If you can't beat 'em, then you pop 'em. You can't man 'em, then you mop 'em. You can't stand 'em, then you drop 'em. You pop 'em, cause we pop 'em like over red and vodka. C3, okay, a millionaire. I'm a young money millionaire.
All right, welcome back. This is the second broadcast of Monday Morning Mining this week. We're doing a special broadcast. We have some amazing guests with us today. First, definitely Matt, my co-host. Good to see you. And would like to introduce Cindy Feng. Cindy is co-founder of BitcoinMiningStock.io. And heavily focuses on the mining stocks and data research. And then we also have Nico Smid, who's has been a guest on the show before, joining us again. Nico, thanks for coming back on.
Thanks for having us.
Clearly, we didn't scare you away, which is a good thing. But no, so Nico runs Digital Mining Solutions, which is a mining industry does mining industry research and associated things. With that said, let's just dive right in. Cindy, give us a little background about yourself.
Thank you for having me here today. So I'm the co-founder of the BitcoinMiningStock.io. Basically, it's a data and research platform for digital asset equities. So more than Bitcoin mining part, if you are like analysts, developers, or even industry players, you can find the operation data, financial data, or other tools to compare company. So you can find out more on our platform. Thank you for having me here today.
Absolutely. Thanks for coming. Nico.
Yeah, Nico Smid. I'm the founder of Digital Mining Solutions, and we provide different types of services. One is market intelligence, so we do a lot of market research and write a lot of articles, have a popular newsletter as well, and do master classes. And then we provide consulting as well, so we assess business plans, business models, benchmark projects, optimize pitch decks for fundraisers. And we provide brokerage services, so we make sites, operators, and builders with investors and miners. And a big part of the job around this time is the annual review, which Digital Mining Solutions have been doing for 3 times in a row. And it's the second time that we collaborate very closely with Bitcoin mining stocks, because Cindy and we both are analysts in the space, but I focus very much on mining economics, trends and innovations, while Cindy focuses more on those public miners and their stock performance. And this year, again, we put out a very in-depth research, a great report, and I think an industry-leading report. And we look at Bitcoin price dynamics, hash rate growth trends. We look at the public miners, so the IPOs, the M&As, the infrastructure deals that were there, the hash rate deployments that were done. Obviously, the big pivot to AI, HPC that we've been seeing, and the corporate Bitcoin treasuries that have been established. And we dive also into the ASIC hardware market, and we end the report with the outlook for 2026. That's something that our readers always appreciate.
Yeah, that's incredible. It's a great report. It's extremely thorough, and there's a lot of great content in it. We're thrilled to have you on to go through it with the authors. And so, yeah, I wanted to kind of dive into some questions.
Sure.
On some of the topics. I think, it's got a very logical flow to it. I guess it opens up with some commentary on institutional capital meeting Bitcoin and some of the price action, maybe the sentiment in 2025. I guess, for both of you, how would you characterize 2025 in terms of, the price action of Bitcoin in the context of institutional adoption, in the context of the mining space?
Yeah, sure. So obviously there was a lot of discussion whether the cycle was broken. And it was the first time that a post-halving year closed in the red. So we had a minus $5,900 or a 6.3% decline in Bitcoin price, which is not common or uncommon for post-halving year. And if you think about it, like a $6,000 downwards price action doesn't sound like a lot, or it sounds like a very flat price action, but a lot has happened, right? In the year, we started the year at a all-time high near 110,000, then dropped all the way to 74 in April, and then crossed 100K again, going all the way up to 126, and then dropping back to 80. So it's been quite a roller coaster. But I think what's more important than the price action is that in 2024 we crossed that $2 trillion market cap for the first time, and what we saw last year was a sustained time above that $2 trillion market cap level. Over half of the time last year, 207 days to be exact, it was over that $2 trillion mark, and the rest of the year it hovered around that level, which is significant and very important for institutional investors. They are looking for assets that have high liquidity. So Bitcoin has proven itself.
We'll grab him back here in a second, but oh, there he is.
Yeah. Oh, sorry. Yeah.
You're good now. You're good.
Yeah.
Now.
So it has proven itself as an institutional investable asset, which I think is a huge achievement. And the ETFs played a big role, right? They were a big driver behind the price. The ETFs were already approved in 2024, but there was a sustained floor of assets under management in these ETFs. And BlackRock stood out amongst these ETFs. It was one of the best performing ETFs for BlackRock, even though it was a red year in price action. So that's very impressive. And BlackRock at the end of the year, end of 2025, had over 770 Bitcoin in their holdings and surpassed Strategy as the biggest holder. So I think those are the key things when we look at price, what happened in 2025.
Yeah. And I just want to add something. So obviously we see institution like investment is still flowing to Bitcoin. And for me, I specifically look at Bitcoin mining companies. So again, we can see the increased amount from institution interest, because basically they invest more money into companies. At the same time, more institutions invest. But at the same time, one thing is very interesting. Bitcoin mining stocks, like historically, treated as a high beta of Bitcoin, and we would expect the price move would be very similar. But in 2025, Bitcoin ended in red, as Nico mentioned. But in comparison, Bitcoin mining stocks, because my platform, we index the mining stocks. So we can see the not like a specific one company, but the overall performance from the whole sector. So if we use the index, the mining stock sector actually has over 150% increase. So that's very different. And when we look at the price move month by month, so for the first half year of 2025, mining stocks was lower than Bitcoin itself. But from the second half of the year, as more mining companies announced the multi-billion dollar HPC deals, the price really went up. So, in some way, Bitcoin mining stock price decoupled from Bitcoin itself. So I would say 2025 is like a year of change.
Yeah.
Yeah, we're definitely going to come back to you on the HPC AI stuff and talk about some of the, I guess, shift from Bitcoin mining into that space for various reasons. But I guess, Nico, I wanted to start with you or go back to you on some of the network fundamentals that you saw in 2025 with hash rate growth, hash price, because like you say, it was a year of chop. You know, price didn't perform according to historical cycles per expectations, and miners seem to get squeezed a little bit. So I guess in terms of the fundamentals, just network growth, hash rate, difficulty, hash price, those types of things, can you walk us through what happened in 25?
Yeah, so if you look at hash price, it doesn't seem like Bitcoin had a downwards year because hash rate grew very much in line with the previous years. So 2023 was the first year that we saw a big boom in hash rate deployment. Around 250 exahashes were added back then. In 2024, it was 288, and last year it was 277. So in nominal terms, it's very much in line with the 2 years before, and it's also I slowly start to conclude that maybe that's the ceiling, also the amount of hash rate that we can deploy on a yearly basis. So I think that's an interesting trend to see. And then last year, obviously, network hash rate crossed at 1 zettahash level, which is very significant. It's 1,000 exahashes. And it was only the start of 2020 that the network was at 100 exahashes. So, yeah, in a bit over 5 years, 5.5 years, the network 10x'd, which is very impressive, and it shows how it's maturing and becoming a real industry. Other than that, just like price, we also saw a lot of volatility in hash rate. Multiple 100 exahashes drops, so that's very unique. We had it one time in 24, but last year it happened 3 times, and towards the end of the year, also a 90 exahash withdrawal. So that's very significant. And in the summer, we saw a big withdrawal because of the curtailments that are happening in the US. A big part of the hash rate is being produced in the US, around 37-38%. Of which a big part is based in Texas, and whenever there's heat waves, miners tend to curtail either because they participate in demand response programs or they want to prevent their machines from overheating. And over the last 4 years, you've been seeing that during the summer there's this stagnation in hash rate growth or even a dip. So we can really speak about hash rate seasonality after a couple of years now. A few trends that boosted that hash rate growth was obviously the public miners. Cindy can tell more about that, but there was a very aggressive deployment by public miners, even though many of them pivoted to dedicate more power to AI, HPC. Around over the top 5, let's say, they have around 25% of the hash rate. And if you look at the top 12, which all have over 10 exahashes operating, they run around 40% of the network. So the public miners are, despite that, the pivot still very important for hash rate growth. And then what we've seen last year as a big trend is the ASIC manufacturers self-deploying or self-mining. The demand for machines was quite soft while the supply was there, and many of these ASIC manufacturers started deploying their own machines. Bitdeer, obviously, a great example. Today, I saw a post by Cindy that they surpassed Mara as the biggest miner, so they've been deploying very aggressively. But also Canaan has around 10 exahashes running, and then Bits Main and MicroBT, the producer of WatchMiner. They're not public miners, so they don't need to report, but it's known in the industry that they deploy worldwide. So that self-mining aspect for the ASIC manufacturers is an important driver for that hash rate growth.
So one thing I noticed in the report was, it really talks about, and you were just touching on this, the ASIC deployments and the hardware trends. And either of you can take this really, but what's the most misunderstood? I mean, I did some mining, worked at the mining facility back in 2017 when things have really changed since then. But what's the most misunderstood hardware, KPI investors anchor on, would you say?
Yeah, I would say efficiency. Miners are looking at the best efficiency, the lowest joules per terahash. But I think it's more important to have reliable machines also. So you can have a very efficient machine, but if it breaks down very often, then you're not online and you're in repair and you're not making any money. So I think more and more miners are starting to realize it's not all about getting a machine that is 1 joules per terahash lower, but getting a reliable machine that fits the environment that they're mining in is as important, if not even more important.
So, and you mentioned, so we're in the zettahash era. We're also in this 5% era. I guess we have about 115 years left to mine the remaining Bitcoin that's out there.
Yeah. So 95% of all newly minted Bitcoin is mined now. So that was not talked about a lot in last year, but it's very significant.
Yeah, and it always blows my mind that that's such a long time for such a little amount of Bitcoin. Most of the supply. So I guess my question is kind of back to the price where it is, the hash price where it is, and the fees where they are. What are miners doing to cope with that? How are they positioning themselves? What are the strategies they're working? Maybe what's not working?
Yeah, so we've been seeing hash price being compressed a lot. Because the hash rate deployments have been outperforming Bitcoin price, let's say. So that puts pressure on the hash price. And last year we hit a historic low of $35 per petahash towards the end of the year. And we've been below the $40 per petahash per day for, I think it's 6 weeks. Today we are at the 40, so hopefully that trend is broken, but the revenue has been very much suppressed, and one part of it is that transaction fees have been very low over the last year. So they've been less than 1% of the total block reward. During the majority of 2025. And what miners do about it, there's different ways they go about it, right? So there's miners that look for cheaper power. There's miners that upgrade their machines to more efficient machines. But you see more and more miners becoming very sophisticated with their energy strategy. They start trading, hedging, and you see also these business pivots, right? Like you saw in the public miners moving to AI, HPC, because miners can make a more steady revenue that provides a premium compared to Bitcoin mining.
Oh, go ahead, Cindy.
So I just want to add a bit more on that. So besides what Nico mentioned, obviously more sophisticated like energy strategy, some of the company, they also tend to Bitcoin treasury, using it as a tool to generate yield and other methods. And obviously HPC plays like a really big part.
Yeah, and also Cindy, you mentioned in the report also about Mara moving or buying a wind farm. So yes. These bigger miners also are moving closer to power generation in order to get access to that lower cost.
Yeah, power generation.
I mean, one of the things that keeps coming up that I think about is, and you kind of touched on it in the report you did. But like, you talk about, public one, the red flags that, that what are the two most important red flags that you look for in miner disclosures? And then two, you kind of just touched on it right here. Like you have the AI piece that a lot of these places have gone, miners have gone into. Outside of the AI piece, what other places are, these are public companies. These people want returns.
Yes.
What else, we all know what happens over time with the reward is shrinking. So how does, and Matt, you just said, we still have over 100 years left. Like, how do you incentivize an investor to come park their money with something that's a decreasing rate of return?
Yeah, so one thing, and especially when I look at the public companies, we all know the depressing hash price and the Bitcoin price, that kind of thing. So it's not attractive to brand yourself as a Bitcoin miner anymore. So, if we look at the companies who did well with their stock performance, basically more investors poured money into this company, right? They changed their branding. So now in general, they brand themselves as HPC data center infrastructure company, or like energy infrastructure company. So that has much more imagination, also align with the overall trend. So that's a new narratives we can see from last year.
Absolutely.
And if you look at the private miners, so I am more involved with private miners, you see that miners become, I think like miners become less of a core business, let's say. So you see, especially in the energy management and grid balancing part, you see that miners will in the future play more and more this role of energy management tool, let's say. You see a lot of heat reuse projects popping up. So then producing heat is one of the core businesses, and then it's done through Bitcoin mining. So I think this suppressed hash prices also pushes for innovation and pushes miners to position themselves, maybe not necessarily as only a Bitcoin miner, but as a different type of business that is able to monetize energy.
Yeah, and you brought up Bitcoin lending earlier. I believe the report calls out some maturity in collateralized lending in the industry and lessons learned since the prior cycle. You called out the treasury strategy that some folks are doing, like Mara is a big example, and they call out in their quarterly earnings calls their Bitcoin activation strategy, which I believe involves some amount of lending and maybe even derivatives. So like how are you seeing that mature in the industry with lending, collateralized lending? What lessons have been learned and what trends can we expect there?
I'm not sure about the trend, but the one thing is very clear is that they really deploy Bitcoin or whatever other digital assets they have, and they generate a yield from that. And we can see more companies, they use Bitcoin as a collateral for their ASIC machine. So they want to get their coin back at one stage, but from investors' perspective, the financial statement would look much better at a quarterly basis. That's something I see from last year, but I'm not sure whether it really becomes a trend, deployed by most of the companies.
Yeah, so I see that pledging the BTC to access ASICs, that's something I've been seeing as well. I think that's a trend that we'll see in the future. I mean, if you collateralize your Bitcoin and you buy an asset that produces Bitcoin, that also creates a a buffer to top up your collateral if you're close to being margin called. So I think for miners it makes sense in most cases to choose that route. Obviously, it adds to the cost, but yeah, I think overall miners are long-term bullish Bitcoin, and they all expect
mean,
price appreciation. So.
Do you think we're going to see more shift to the AI side, like a continued shift to the AI side to really offset the cost? Because obviously the AI side's been generating a lot of revenue, which has really helped, offset, I think, some of the burn that these mining companies have. Just Matt, who was it we were talking about the other day, the last quarter? I mean, they sold a good chunk of was it Riot?
Right.
Yeah.
Right.
They sold a good chunk. And I mean, obviously the whole goal is they're a business at the end of the day. So
Yes.
while they want to hodl all their coin, they can only hodl so much because they need to pay the bills too.
Yes.
And
Self-operation.
Right. And I think that's a misconception that I think a lot of people have is that, oh, well, we mine all this coin, we're just going to hold all of this. Well, you're a business. You got to pay the bills too.
Yeah. So just elaborate a little bit on that. So last year, we all heard about the Bitcoin treasury strategy, and we heard, this company added this much Bitcoin on their balance sheet. But towards the end of the year, especially, after around October, so before that, almost majority of the mining companies, they add their holdings. But after that period, for example, even Mara started selling some Bitcoin in October. And later we saw more companies, they sold some Bitcoin. So yes, you were right. In the end of the day, it's still business. There are bills to pay. So when the price does not perform very well and you don't have other business revenue, then you have no choice but to potentially sell some of your hodlings.
Yeah, and I also think that AI HPC pivot will continue into 26, especially for these public miners that have worked years on getting access to big power contracts, right? So power is the bottleneck for AI HPC, and these miners they have gold in their hands, so to say, when it comes to these contracts. So it's very logical from a business perspective to pivot to that AI HPC data center routes.
Yeah, and even some public mining companies, right now they are doing mining and HPC at the same time. But a few companies, for example, TeraWolf and the Beta Farms, basically they said, they are planning to basically end mining at one point. So yeah, potentially see more companies to HPC. But at the same time, we have to point out one thing. HPC data centers are very expensive. Even companies have resource, for example, land, energy, and other lease or whatever. Do they really have a capital access to build HPC data centers? Do they have a human resource for that? Because again, it's very competitive. And when you think about, you need around, this is just an estimation, probably $9 to $10 million per megawatt. Just imagine how much money or capital you need to inject to start with. So in some way, that's luxury things. And to get all of this. So maybe it's a logic to do HPC or AI data center, but at the same time, there are realistic factors they need to consider and fund resource.
Yeah, I guess you move from the deal making announcement stage to the execution stage and capital raising stage, and you gotta see how that goes, I guess. But I guess Nico, you mentioned I guess 3 years in a row of 250 or greater exahash added to the hash rate. Like, given all that, you know, some of these companies are announcing plans to focus only on AI HPC in their future pipeline or wind down their Bitcoin operations. What do you think is going to happen with hash rate in 2026?
Yeah, I think it will continue in the same in the same pattern as we've seen. I mean, if hash rate index publishes this global heat map, it's a great map to see how global the industry already is. And there's many countries out there in the Middle East, in Africa, in South America that are focusing very much on onboarding miners because they have excess power or stranded power. So I expect still a growth, and even in the US there will be hash rate growth, but maybe at a slower rate compared to previous years. But miners will go to smaller sites, and if they go to bigger sites, it's probably in more risky jurisdictions where maybe AI HPC companies are not feeling comfortable to risk their capital. So I do expect a continued growth. There's still a lot of opportunities for mining worldwide because there's still a lot of power available that's affordable for miners, let's say.
What do you think are like the top 2 or 3 like geographies that people are going to be moving to, where there's maybe attractive power and good kind of regulatory protections in place that can protect?
Yeah, so in the Middle East, you see countries popping up quite a bit. So Oman has been growing very well, and the UAE. In Africa, Ethiopia grew a lot, but now they announced price hikes. So I expect that country to slow down maybe in the coming year. But there's other countries with a lot of power there, like Nigeria with a lot of gas, where I've been seeing more and more miners go to, and then also around Victoria Falls in Uganda, there's also a lot of hydropower. So I expect more deployments in Africa, Middle East, and then South America. I see lots of movements in Brazil, to a lesser extent in Argentina, and then
How
in
about the Asia?
in Asia. So Russia and China are still the number 2 and 3 markets. Kazakhstan is also in the top 5, I believe. So those are important countries on that side of the continent. But to be honest, like, I have the least insights into Asia because I'm less active there, let's say. But yeah, China is housing a lot of these ASIC manufacturers, mining pools, institutions that fund a lot of miners are there, like Ant Alpha has Chinese roots. So there's a big part of the ecosystem is based in China. So I do expect that China won't go anywhere, even though here and there's bans being announced. Or
So, with that, I mean, we're coming up on time here in 2026. I mean, let's see, we moved up today a little bit. 4%, almost 5% on Bitcoin. What if you had to wave a magic wand, what would you say? What do you predict here in 2026? What do you think we're going to see go on from both of you? I'd love to hear your opinions.
Okay, Nico, you start.
So I don't do a lot of predictions, but I've mentioned this before. Like 2025 has been very bullish if you look at the regulatory environment. That everything that happens on the fundamental level of Bitcoin. So I think if you zoom out, Bitcoin is still undervalued, and I expect it to go up. Whether it's this year or next year, the one after. To me, that's not that important. But for miners, obviously, it is, because I've did some projections. If we have a similar growth as this year in hash rate, and Bitcoin doesn't recover back above that 100K level, then hash price stays at 40 or below, $40 per petahash per day or below. So for miners, it's going to be important to get it back above that 100K. And if not, I think ASICs will move around, move hands and go there where energy is cheaper. So that's maybe not the most spectacular prediction, but my expectation.
Okay, I add a prediction as well, since we talked about HPC AI pivot. I think this year we will see more like miners land multi-billion-dollar HPC deals with a hyperscaler. So in 2024, we have one company called Certific land like a major deal. And in 2025, we had 5. And this year, as more AI-related usage, there is demand for that kind of thing. But here's about the part. I think for companies with HPC or AI like deals, probably investors would assign lower premium to the stock price. So basically last year, whoever landed major deals, their stock price skyrocket. But this year, besides like landing the deal, people would ask more practical questions, like how are they going to fund the basically execution part. So people ask questions, then, as we mentioned, it involves bigger investment. So probably would not, even if a company land a major deal, the stock may not fly as last year. So that's one thing. And another thing also about the Bitcoin treasury strategy. Last year it became trending around middle of the year. And even now, a few companies are sticking or push hard towards that narrative. But we can see the market is kind of losing interest. So I think this year, some companies would still talk about their digital asset treasury strategy, but that's only a part of the company identity, not the main narrative.
Okay, and Cindy, if Bitcoin starts running, let's say it goes to 200K, will those more Bitcoin mining focused companies outperform those that heavily pivoted to AI HPC? What's your expectation there?
That's a hard question, because last year, when we have an index, we expect them to move in the same direction. And when you say, Bitcoin price surpass 200K, we would expect the miners to move in line. But as more companies or public companies, they already dedicated some resource to HPC part. So the correlation between like Bitcoin and mining stocks, I don't know how strong their relationship will stay. So I would be honest, it's hard to say, if a Bitcoin price really goes up a lot, Bitcoin mining stock will go the same. I think it's hard since the business is changing.
No, I think honestly, it's going to be an interesting year. We have a lot of stuff going on. I mean, for anybody that has not read this report, I highly recommend getting it, and we'll make sure we post it, on our website, 21rates.com. But definitely, Cindy, thank you for taking the time. Nico, always a pleasure.
Thank you for having us.
If people want to reach you, what's the best way to reach both of you?
Okay,
Cindy?
So can find me on Telegram, just my name, Cindy Feng, or linking again, just my name. or email Cindy and at bitcoinminingstock.io. So any way
Fantastic.
works.
Yeah, for me, it's you can go over to the website digitalminingsolutions.tech, and I'm also very active on LinkedIn. So Nico Smid at LinkedIn, do a lot of longer format analysis there. So please follow, and if you need anything, just feel free to send a DM or reach out via the website.
Fantastic. Matt, always a pleasure. Thanks for taking your time.
No, I mean, it's an amazing report. Congratulations on its release. Highly recommend everybody go out and read it. And yeah, thanks for joining us to talk through it.
Thank you for having us today.
Thank you very much.
We will be back next Monday. We have another a mining guest actually coming from Alberta, Canada. So it will, little different side of the world from where Cindy is, but, definitely good stuff. Cindy, we'll bring you back on. Thanks again for taking the time, Nico. Always a pleasure. And tune in next Monday. Thanks so much, everybody.
Have a lovely day. Thank you.
You too. Well, evening.
Bye.
Oh, good evening. Right.
All right. Thanks again.
Bye-bye.
Bye for now.